S. Narsingh Rao, who's the chairman of Coal India, joins us from Kolkata. Mr. Rao, thanks very much, sir, for taking out the time. Take us through the earnings for the quarter gone by. It has been a strong set of numbers for Coal India. A lot of brokerages giving it a thumbs up, with profits rising actually almost 10%.
There was a growth, fairly good growth, I would say, because most of the growth has come on the volumes. I'm also happy to say that because this has come even without any increase in the coal price during the period.
Mr. Rao, how have volumes and production been in Q3? Is the higher sales volume only on account of inventory liquidation?
No, you see, the production has been up by about 5.9, close to 6% production growth, whereas the offtake has been 8.05. So the balance over the production has come from the inventory liquidation.
As diesel prices rise, what kind of margin impact is expected on Coal India? The power and fuel expenses have been, rising sharply as well, or have actually risen sharply this quarter.
Next quarter, surely the impact of the diesel would be there because, as you know, recently in January they have increased this bulk rate, no? So that would have some impact on us. Employee cost, there won't be any substantial increase, a normal secular increase, quarter on quarter increase on account of this consumer price index related DA neutralization. Otherwise, we don't expect much rise, but certainly there will be a one-time jump in the diesel cost.
Mr. Rao, give us your outlook on margins for Q4 FY14.
We are confident that with the operational performance improving, we will be able to keep pace with that kind of thing. Last year, of course, it was a one-off because there was an increase in the coal price just before the starting of the year. So therefore, it was not really in a kind of a like-to-like comparison. But this year, operational performance has improved. We expect it to continue.
Right. There has been a rise in the other income for Q3. On what account have we seen the other income rising by almost 500 crores?
Actually, in our accounting, that other income is a kind of a misnomer because it should really be part of the operational income, what we call the surface transport charges. We make some charge against the consumers, whereas what we pay to the transport contractor, we show it as an operational expense, but return we show it as separate. So it should really be, technically it is shown like that, but should be really part of the overall sales realization actually.
Also give us your guidance for production for FY14. There are some new mines that could open as clearances have been granted for a few mines now.
Yeah, next year of course we have a target of 492 million tons, a formidable target from 470 this year. That is coal supplies I am talking about, offtake. So certainly if we achieve 470, now that will be an increase of 22 million tons.
Right, news reports suggest that production guidance has been cut for the current fiscal. Could you throw more perspective on that?
16, I don't think we have really cut anything like that, but yes, numbers are looking a bit tough at the moment. Only the production side. Now, we are not unduly worried about that because there is no point in producing and adding to the ground stock. So it's fine as long as whatever we can liquidate or whatever we can dispatch to the consumers, that should be fine.
Any price hike in the offing, sir? And any chances of a hike in this fiscal, which is before 31st of March, FY13?
All I can say, not at the moment. Maybe sometime later, I cannot say. But as on today, there is no proposal before us for the hike.
Your comments on the new price pooling mechanism that is being discussed, what is the implication for Coal India?
No, at the moment it is only hypothetical. I am not aware how it is going to be, when it is going to be. So let's see. Let the decision be made, then we will react.
What do you expect from this year's budget, sir?
I don't think there will be, anything in the budget that would be impacting on us. But certainly, a couple of legislations that are pending before the Parliament, both the land acquisition and the mine MMDR amendment, etc. They would have some impact on us, but I cannot speculate on that when it will happen. But from the budget, I don't think there will be any significant impact on us, either positive or negative.
Any respite expected in terms of rake availability in the rail budget this time?
Not really, because the rake availability is nothing really to do with the budget thing. It's more of an operational issue. There is a substantial growth during the current year. As on today, there's a loading is up by 11.1% railway loading. So we expect to reach finally around 11.5 or so in the year. Then the challenge is for our 13-14. We should further grow at 10% at least the next year over this very high base. That's a challenge, but nothing really to do with the railway budget, I would say, as such.